for extension of its currently. Right.
Please go ahead.
Shall I continue? Okay.
Yeah.
At the extension of the initial license in December 31st, 2020, the company decided not to apply for extension of its current license under the Petroleum Profit Tax regime and opted for automatic conversion on January 1st, 2021 to the Petroleum Mining List as enriched in the Petroleum Industry Act 2021. The following details were extracted from the financial statement of the company for the year ended 31st December 2021. We have the revenue, we have the expenses and expenditure, the items as follow. Then we have the additional information.
Yeah, please read the additional information.
All right, so S2 appraisal were consisted of 60% tangible cost and 40% intangible cost. Expenditure for the purchase of information on existence of petroleum deposits included: 1. The acquisition of geophysical information, 100 million; geological data and information, 120 million; others, 85 million, making a total of 305 million. Miscellaneous expenses were gas fuel, 720 million; donation to orphanage home, 132 million; terminal costs, 169 million; stamp duty, 18 million; signature bonus paid for the acquisition of petroleum, 15 million.
Please mute your mic.
Agreed capital allowance.
Mute your mics. If you want to have a side talk, you can mute your mic. Okay, go ahead, sir.
Agreed capital allowance for the year was 4,500 million. Production allowance after commencement of the act: the onshore operation, 800 million; shallow water operation, 1,100 million, making a total of 1,900 million. The last one, assuming that 440 naira is equivalent to $1 and tax liability payable will be in local currency. Required: compute for the relevant assessment years the hydrocarbon tax liability and company income tax liability.
So now the first thing is for us to determine the hydrocarbon tax, and the next thing will be for us to determine what? The company income tax, right? So now let's start first with determination of hydrocarbon tax liability. Are we on the same page? Now, where you are given, the first thing is, we have
Yes, sir.
two things here. We have revenue and expenditure, right? Where you are given the actual and the fiscal price. The price of crude shall be the higher of the actual price and the fiscal price. You can also have it as either the standard price or the posted price. They are saying the same thing. But either ways the examiner put it, the revenue shall be the higher of the fiscal price and what? The actual price. Is that clear?
Yes, sir.
Hello. That's clear to an extent,
Yes,
Abi.
sir. Yes, sir.
So we have, what's the name of the question? You have Jaga Petroleum Limited. Determination of what? Hydrocarbon tax liability. Hydrocarbon tax liability is on preceding year basis. So we have for 2022 year of assessment. Are you with me?
Yes, sir.
Good.
Hmm?
Now, the first we have is the crude oil sales. Abi? Crude oil sold. And we have for Bonnie, right?
No.
So for Bonnie Light, it is what?
Only light avocado. Quantity 7.5 barrels.
Crude oil sales. There is Bonnie, Abi. Bonnie Light. Bonnie Light is how much? 7.5 million barrels,
77.
right? Times 77. And you know we are working in Naira, so you have to translate the currency to Naira. And you are doing that, you use the exchange rate. And the exchange rate is what?
440 to a dollar.
That that was the good old days, Abi. So you have 7 point, sorry, let me put here, all figures are denoted in millions. So I have 7.5, right? Times 77 times what? 440.
440.
Is that fine?
Yes, sir.
Then the next thing we have is for Cardos medium. And the Focados medium is 5.2 million per barrel times
Yes.
69, right? I'm sorry, 5.2 million barrels. And the higher, the fiscal price, which is the higher, is what? 70, right? And then
Yes.
times what? 440. You have how much? You have how much?
160,000.
0.2 times what? Okay. Is it 160, 160?
Yes, sir.
Then we have condensate from associated gas. That's ABC condensate, Abi. ABC condensate is what? 4 million barrels, right?
Yes.
Times how much is it per barrel? 55 this time because 55 is higher.
Yes.
Times 440 because that's the exchange rate, Abi. So what do
Yes.
you have? You have 4 times 5
Please,
times.
sir, you have 550 here. And also, why are we using actual price, not the fiscal price?
Because you use the this thing, the higher. I explained before that you use the higher of the fiscal price and the actual price. It's the higher price that you use in determining the revenue, right?
Yes, sir.
And then the next one we have is gas liquid from associated gas, Abi.
Yes, sir.
Yeah.
Where did you get the 550?
It's 450 I used.
You wrote 550.
550, sir.
Hey, sorry. Oh,
That was
440 Abi. Is that exchange rate Abi?
Yes, 440.
Okay. Gas liquid, and here you have XYZ liquid Abi.
Yes.
And
Yes, sir.
XYZ liquid is how much? 3.8 times 50 this time, right? Times what is
Yes.
the exchange rate? 440.
440.
So you have 3.8 times 50 times what? 440.
440.
So total revenue now is 594,660. Right?
Yes, sir.
That's the total revenue.
Profit.
Yes, sir.
Total profit, total income. Yeah? In
Sorry, sir. I
case,
want to ask you.
yeah, please go ahead.
Okay, regarding the higher, sir, it's not regarding only this in crude oil. That is, it applies for gas and crude oil, both of them,
Yes,
right?
yes, for all of them.
All right, sir. Okay.
You pick the higher of the actual price and the fiscal price. Do you understand?
Yes, sir. Yes, sir.
Any question? So if there were to be balancing charge, you would have added it. So let me just put it here. Add balancing charge. But is there balancing charge in this question? What's the balancing charge?
No.
Hey, give me label.
No.
Sorry. Balancing charge is 0, Abi. There's no balancing charge in the question.
Yes.
So you have total gross income. That's how much? Then less expenditure, allowable expenses under section 263 of PIA. So now, let's move straight to the allowable expenditure. Last class, we've discussed the allowable expenses to an extent in the last class, Abi. So I wouldn't want
Yes,
to
sir.
bother you again with all of them, but as the question goes on, we'll try to identify them again. The first, royalty incurred and paid for. It is allowable, right? Royalty is allowable. And how much is the royalty? Royalty is 118,900, Abi.
Yes, sir.
The next thing you have is the production cost. And production cost is an allowable expenses, except that the examiner may want to give us some additional information. But let's check, is there anything to that effect to production cost? No, Abi.
There is no.
So production cost is how much? General.
112,600. 667.
112,600.
667.
Sorry, let me just go back to the sheet so you can see sorry. On to 660.
Yes.
Then we have concession renters. Concession renters
That
is
is
also allowable expenses, right? Because yeah,
25,200. 25,200.
25,200. Like this, Abby.
Yes, sir.
Then we have repairs of plants and machineries and fixtures. You have to be careful at this point because the examiner could put additional information. But let's check, is there any additional information regarding repairs? No, right? So since the examiner did not put any additional information, no adjustment. So we'll put repairs of plant. Figure me, please. 2680. Is that clear?
Yes, sir.
Then we have exploration well. First, exploration well is an allowable expenses. Figure me, please.
2770.
2770. Right?
Yes, sir.
Then what you have is
Yes,
repairs
sir.
of production, implement utensils, right? And repairs is an allowable expenses, Abby.
1850.
All right. Then the next thing you have is cost of gas reinjection wells. Also allowable.
1250.
Good. 1250. Like this, Abby.
Yes, sir.
NDDC charges is also allowable. That's Niger Delta Development, if it's commission or
Commission.
council. Abby.
Yes. Yes, sir.
NDDC charges. That guy that used to faint,
200
Abby.
naira.
200 million.
200.
Purchase of information on existence of petroleum deposit. Purchase of information is actually allowable, but then it also has the same application with your your research and development cost. I don't know if you still remember research and development cost. Research cost is allowable. Development cost is expected to be capitalized. Do you remember? Hey. So now we have expenditure of
Yes,
purchase
sir.
information on existence of petroleum deposit include acquisition of geophysical information is allowable, right? Acquisition of geological data and information is also allowable, but others will be regarded to be others, right? So the others will be disallowed. Do you understand? But acquisition of
Yes, sir.
geophysical information is research cost. Geological data and information is also a research cost. So only the research component will be allowed, but others, the examiner is silent, so we don't know what that is for. And where the examiner is silent, so you assume it is going to be development cost or any other cost, and that should be disallowable for tax purposes. Do you understand?
Yes,
All
sir.
right, sir. 220.
Yes, sir.
We have purchase of what? Information.
Please come again, sir.
Where should I come from?
Maybe from your house, sir.
Development.
So I was saying that what we need in this what we need from this piece of information is which of them is research and which of them is otherwise. Acquisition of geophysical information is a research component, right? Geological data, acquisition of geological data and information is also a research component. But for the others, we don't know what that is for. So what we are going to pick is only the research component. So you have what? 220. Are we on the same page?
Yes, sir.
Yes, sir.
The next thing you have is custom duties. Custom duties is disallowed. Custom duties is disallowed. Is that clear? Then the next thing we now have is well appraisal cost. The examiner is nice here by telling us the first well appraisal cost is 39. Regardless of how many wells they dig, the only allowable portion is the first 2 well appraisal cost. Do you understand? So in case the examiner is saying 5 well appraisal cost 39, what you're expected to do is to prorate it and say 2 over the 5 times the figure. But in this instance, the examiner has given us only the first 2 well appraisal cost, and that will be the disallowable expenses. Do you understand?
So please, I have a question.
Yes, please go ahead.
So, about the exploration well costs. Does it have any restriction?
No,
The
it's the
exploration well
no,
cost.
it's the appraisal cost that has restriction.
Okay, sir. Thank you very much.
First 2 well appraisal cost, Abi.
Please, can you read?
Can you hear me? Are we on the same page?
Up to
I,
5 pages. Can you explain that?
what should I didn't get you. You were breaking.
The first 2 appraisal well cost, sir.
Okay. The well appraisal cost is expected to be first 2 well appraisal cost. So I was saying even if you have 5, you're expected to do just 2 over 5.
Okay.
Yeah. So that's what I was saying. So that's how much?
Okay, sir.
39.
39.
Right? Then the next thing we have is decommissioning and yeah.
The additional information one spoke about the first 2 appraisal. Does it not have effect with tangible and intangible?
No, it doesn't. It doesn't have effect for hydrocarbon tax. All right, so we have decommissioning and abandonment. Because the act did
It's
not.
allowable.
How much is it?
15.
15.
Right? The possession is disallowed,
sir.
right?
Yes, automatically.
Environmental remediation fund
fund
is allowed.
is allowed. 1008.
1008. State government ground rent levy is allowed, right?
Yes.
22.
Like this, Abi. Finance cost. Anything
Yes, sir.
finance
20.
cost is disallowed. Do you remember?
Yes, sir.
Sir,
Finance
I think
cost.
finance cost is also interest.
Yes, it's also interest. It's disallowed.
Okay. Okay. All right.
Anything that has to do with borrowing, any cost of borrowing whatsoever, including bank
No
charges.
implication of foreign. Okay.
Yeah, it's disallowed. Then we have what? Host community cost.
Host community. Yes.
You see, it's very simple, Abi. 1, 4.
Because of the boss, sir.
Miscellaneous expenses. Miscellaneous expenses is one of the scapegoats that we used to have. It used to have additional information. So let's check out the miscellaneous expenses. What they tell us about it? They said miscellaneous expenses were gas flare fee disallowed, donations to orphanage disallowed, right? Terminaling costs allowed, stamp duty allowed, signature bonus paid for the acquisition of petroleum deposits disallowed. So out of all of these things, only the stamp duty and terminaling cost is allowable. Do you understand?
Yes, sir.
So we have how much is the
But,
terminaling
sir,
cost? Yes?
160.
uh, uh,
I didn't get you. Please go ahead.
sir, how do we really differentiate between these inexhaustible, allowable, and desirable lists?
It's just by practice, basically. The more you get practice, the more you practice, the more you get familiar with them.
Okay.
But
Okay.
the thing
Thank you.
is, the act, the one beautiful thing about PIA is that the act is so clear about the allowable and disallowable expenses. So it's really specified in the act.
Okay, sir. Thank you.
All right, so we move on. Admin expenses. And the admin expenses will only be allowable under company income tax, but will be disallowed under hydrocarbon tax. Do you understand that?
Yes, sir.
So what's total allowable expenses? How much? Like this, Abi?
Yes, sir. So,
But don't
okay,
forget,
sir.
we discussed about cost profit ratio in the last class on Petroleum Industry Act. Do you remember? And we said cost profit ratio is saying that the cost to be incurred by a taxable person for hydrocarbon tax shall be restricted to 60% or 65% of the total income of a taxpayer. Do you get it? Do you understand it?
No, sir.
No,
No,
sir.
Can you
sir.
come again, sir?
We said that last class we were discussing about cost profit ratio, and the Petroleum Industry Act provides that the total allowable expenses of a taxpayer shall be restricted to 65% of the total revenue of the taxpayer. Do you understand? The total allowable expenses cannot be more than 65% of the revenue.
Okay. That means we need to find the 65% of the revenue first and
Yes,
compare with the allowable.
yes. So we have to now do our workings to get our cost profit ratio. Workings. So determination of what? Right? So we have to get our gross profit ratio. Please pay attention. This life is not just balance. Me, I'm shouting. Somebody's eating. It's not balance. So gross revenue is how much? How much is the gross revenue?
594.
594,660, Abi.
Yes, sir.
So the maximum allowable revenue is what? I mean, the maximum allowable deduction is how much? 65%, Abi.
65%.
Yeah, so what's 65%? How much is 65%? Now, are we together, please?
Yes, sir.
Yes, sir, but it's more than the allowable.
Yes, we are still going somewhere. We've not computed the CPR. This is not all. Right?
Yes, sir.
Now, we now have
Okay.
what is the total allowable deductions? So we've gotten the restriction, Abi, 65%. Total allowable deduction is how much? That's total operating cost.
274.
Total operating cost, which is the allowable deduction. How much is it? We add 2 what?
74.
539, Abi.
274. Yes.
Yes, sir.
Then we will add our capital allowances to it. Right? So do we have capital allowance? We were told that the agreed capital allowance is how much?
4.45.
Abi? So
Yes,
we
sir.
have total eligible cost. That's the total cost that is eligible for deduction is how much? That's 274,539 plus what? 4,500.
4.5.
Right?
Yes, sir.
Are we on the same page? But don't forget that in our last class,
Yep.
we said we have some costs that are exempted from computation of cost profit ratio. Do you remember? So
Yes, sir.
we deduct exemptions from cost profit ratio.
Right. That's what's not my job. I don't know.
Number one
That's
deduction is royalty paid is exempted from the cost profit ratio. So how much is royalty paid? Are we together? How much is the royalty paid? 118,600, right?
900.
It's 900, Abi? Sorry.
Yes, sir.
If you recall, we said NDDC charge. Thank you. We said 118,900. Yes, thank you. Then we said NDDC charge is exempted from computation of your CPR. So NDDC charge is how much?
118,900.
Yes,
200.
NDDC charge is what? 200. Right?
200.
Also,
Yeah.
concession
200.
renters is actually part of it. So how much is construction renters?
25,200.
25,200.
200.
25,200, Abi?
25,200.
Contribution
Yes,
to host community is also exempted. Contribution to host community. How much it was contributed to host community?
Host community. 1,400.
Do you get it to this extent? Then we have
Yes, sir.
another contribution to fund, which is environmental remediation fund, Abi? Environmental remediation fund.
Cost.
How much is it?
1.8. 1.8.
All right. So those are the exemptions from
1,800.
cost profit ratio, right? So we'll add the exemptions together now. So you have 147,500. So you have net eligible cost is how much? 279,039 minus what? 147, right? So it means that, are we together? The total eligible cost, are we together?
Yes, sir.
Total eligible cost shall be the lower of the cost profit ratio and the what? Net eligible cost. Do you understand? So it means restricted to CPR, working one, Abi. So what's my total eligible cost now? My total eligible cost is how much? Please give it to me.
Lower of.
Yeah. So 131,539. That's what I will take from here. So we have 131,539. Are we together, please?
Excuse me, sir. Sorry, I have a question.
Yeah, please go ahead.
Like, how can we differentiate, or what's the reason behind allowable expenses? Because some of the expenses are we deduct exemption costs from CPR. So how can we differentiate those costs from allowable expenses? Because in the allowable expenses, they are part of it. In calculating our CPR now, they are.
So my phone is logging me out and logging me in. Bear with me,
Hello, sir.
please.
So To answer your question, in the Petroleum Industry Act, the act made it very clear that part of there are some expenses that there are expenses that are part or that will be deductible from the cost profit ratio. Do you understand? So in determining the cost profit ratio, those expenses were what we take cognizance of, basically. Do you understand? Though they are allowed for tax purposes, but in the computation of cost profit ratio, they are not allowable or they are not deductible. Do you understand? They should not form part of the cost profit ratio. That was rationale behind it.
Sir, please answer another question concerning
Yeah,
that. Apart from those ones that we've already deducted, do we still have others that we've not mentioned here?
The one that is like it is the admin charge, but the admin charge, if you include the admin charge in the operating cost, you should also include it in the CPR. But other than that, I don't think there's another one.
Okay, sir. Thank you very much, sir.
You're welcome.
Hello, good evening, sir.
Yeah, good evening, ma'am.
Yeah, I actually joined the lecture late, but I just want to know the difference between Petroleum Income Act and carbon. What is it?
Is the Petroleum Industry Act? Is the Petroleum Industry Act that made us charge hydrocarbon tax? So hydrocarbon tax is a tax that is actually permissible under Petroleum Industry Act. Before now, there was nothing like hydrocarbon tax under Petroleum Profit Tax Act. But now under Petroleum Industry Act, we now have I didn't get you, please.
Hydrocarbon Act. So, Hydrocarbon Act is under Petroleum Income Act, right?
Petroleum Industry Act, not income. Petroleum Industry Act.
Oh, Petroleum Industry Act.
Yes, PIA.
Okay. So Hydrocarbon Act is part of Petroleum Industry Act, right?
There is no Hydrocarbon Act to the best of my knowledge. What we have is Petroleum Industry Act. It's the Petroleum Industry Act that now made hydrocarbon tax permissible.
Okay.
Sir, please, before you ended that, I want to ask another question.
Okay.
Sir, I'm confused about Petroleum Profit Tax and Petroleum Industry Act. Is it that they have scrapped Petroleum Profit Tax?
It is safe to say that Petroleum Profit Tax is scrapped.
Okay, because like there is a mix of, I don't know if I should still go ahead and read it or I should just leave it behind and be expecting this in the exam, or I should still know the two together because I don't even know. I'm still having that kind of thoughts. But I was like, today I'll ask the question.
If I were to be an examiner, I would test what is permissible under law. And what is permissible under law is Petroleum Industry Act.
Now.
Yes.
Industry Act.
Yes.
Okay, sir.
But like I'm not the examiner, so I don't know if you can bring Petroleum Profit Tax. But if I were to be an examiner, that's what I would do. Does that answer your question?
Yes, sir. Yes, sir. Then the oil mining lease, because this same something, I did it last diet.
Okay.
And there is all these tax rates where, it's always at the back of our. So I saw oil mining lease. I don't have the idea too. But is this the same format, the same method?
Yes, that's what
is that oil mining lease.
Is the oil mining lease that that we need to compute hydrocarbon tax in the first place.
Okay, so because one has 15%, one has 30%.
Yes, don't worry, we'll still get to that. Don't worry.
Thank you.
We are not through with the question.
Okay, sir. Thank you.
You're welcome. Are we on the same page?
Hello, good evening.
Yeah, good evening, sir.
Yeah, please, I want to ask, in this Petroleum Industry Act, I discovered that we're giving the actual price and the posted price directly, unlike the previous PPT that we need to go and calculate our posted price. Is this how you will be given in the exam? Directly, without any further computation?
Hopefully, we expect the examiners to still give you like this directly. But that's major computation. I understand what you mean, that you'll be given you'll be given 55, and then you'll be asked, and then you'll be given a degree difference. And then
Exactly.
you use the degree difference to determine it. It's still applicable, sure.
Exactly.
It's still applicable. Yes, but I don't expect I mean, life is getting more difficult, so the examiner should not actually go that route. But if it goes that route, that is also applicable.
Okay. In that case, I think can we have something like an illustration like that?
That will help you to determine the degree, Abi.
Exactly, please.
Okay, no problem. I have a question. I have a note that I sent across under Petroleum profit tax. But what I will only be solving on that question will just be to determine the degree where you are given an increase and then there's a decrease in the degree.
Yeah, it's fine. And the second question is, can we use the past question of the previous years? You know, most of the past question deals with petroleum profit
Profit
tax
tax.
act. Can we use those examples, those questions to solve this particular petroleum industry act?
Yes, you can use it, but obviously you are not going to be getting the same answers.
Okay, and then the exemption of the document that you did for you to arrive at these cost profit ratios, please can you scroll down?
Okay.
All this exemption that you did, yes, deduct exemption from cost profit ratios. Are you saying that the cost profit ratio is that 279093? Or
No.
I can't find the
No.
cost profit ratio. Can you just write it?
Ideally, the cost profit ratio is 386,529. That's the restriction. That's the maximum it could be.
Okay.
But the standard, I mean, I said standard. Sorry, the tax law is saying that the cost profit ratio is 386,529.
Okay.
But you're expected to pick the lower of your eligible cost and the CPR.
Okay.
But now, in determining the eligible cost, there are some costs that are not eligible under CPR. So those are the royalty paid, NDDC charge, concession rentals, host community fund, environmental remediation fund. So those are the
Which you
costs that are
deduct
not
from the
eligible
total.
under cost profit ratio.
Okay, which you deduct from the total eligible cost to arrive at that net eligible cost.
Exactly.
You now compare the net eligible cost and the
CPR.
Cost profit ratio.
Exactly.
You now select the lower between the two costs.
Exactly.
Right. Thank you.
You're welcome. Yeah, transportation cost is allowable.
Sorry, I want to ask something. Under this exemption cost from CPR, we have about 5 items here. Are these just the 5 items that are deducted, or we have some other items?
Basically, these are the ones that I can actually see offhand now.
Okay, sir. Okay.
Yes. Are we on the same page now?
Yes, sir.
All right, so
let's continue, sir.
Allowable expenses carry forward. So we have the total allowable expenses minus the 131,539. Do you understand?
Okay.
Yes, sir.
Right. Any question?
No, please, how did you call this, sir?
You know, like when we're
Please, how did you
doing,
come by the one?
students are funny. The way they ask questions, how did you come about? I see my manufacturer figure. But let's go ahead, Sha. Now the allowable expenses are, the total expenses incurred that are liable for tax purposes is 274, right?
Yes.
But based on the position of cost profit ratio, it cannot be more than 131. So the excess will be carried forward to the next year. Just like the case where you have this thing. Remind me, please. When you have capital allowance, you know, when your capital allowance is more than your profit, or when it's being restricted to two-thirds for company income tax. Do you remember?
Yes.
You know, the balance will take it forward. So that's the same application here. The allowable expenses should be carried forward. So we now have adjusted profit. So the adjusted profit is what? 594,660 minus the net eligible cost.
131.
131,539. Abi?
Yes, sir.
So now you less capital.
All right.
So how much is the capital allowance?
45.
45. That's what you deduct. Right? Are we on the same page?
Yes, sir.
Before we are on the same page, sir, the capital allowance of a thing, is it that we are going to have it straightforward? Or they'll give us like the onshore, that one that will have...
No, you should have it straightforward. It's straightforward.
Okay, sir. Okay, sir.
Right, 45862, and that's Petroleum Industry Act. Petroleum Investment Allowance. 5%, 10%, 15%, and 20%. Almost everybody here, old people, like, you know the PPT here.
Sorry. I have to have under the PI, do we have any restriction to capital allowance or
No restriction, no restriction. We can't restrict your expenses and still restrict your capital allowance.
All right.
Then deduct production allowance.
Excuse me, sir.
Yes, please.
Hello, sir.
Yes.
Yes, sir. Please, for purpose of emphasis again, sir, you know, that 20% for 5 years, sir, we don't do it yet too, sir.
An allowance is still applicable.
All right. So we solve for that, right?
Yeah, if the examiner wants you to solve for it. But I mean, the solvings are always much. What I see the examiner testing is this CPR, basically.
All right, sir.
All right.
Okay, sir.
I think we're so used to that PPT that we don't want it to go.
Exactly.
Hello, sir.
Yes.
We need to really try to move our
Unlearn.
knowledge to PIA now. Honestly, unlearn PPT if you want to really enjoy this topic. Unlearn PPT. I know you are married to it, but go and divorce it. Thank you.
Yeah.
Hello, sir.
Yeah, please.
This is transportation costs. It is allowable expenses under PIA.
Transportation expenses allowable.
Okay, sir. Thank you.
You're welcome. All right. So production allowance. So for production allowance, we have onshore operations, Abi.
Yes.
My God have mercy. How much is the onshore operation? 800. And shallow water operation is how much?
1,100. 1,1.
So you have 800 plus 1. Right?
Why?
So you then have chargeable profit minus. Right?
Yes.
Actually, they in the act, it is actually based on the water operations, right? The tax rate is based on if it is a mining lease and help me now, or prospecting license. If it is a mining lease or prospecting license, that's what will determine the tax rate, and also depending on the water operation, if it's shallow water or if it is deep waters. But for the sake of this exam, the examiner would have given you a rate at the back of your question, right? So you have hydrocarbon tax, 15% for prospecting license and marginal field companies, and 30% for petroleum mining lease company. And this is a mining lease company, right? So for
Petroleum
petroleum mining lease company, so you have hydrocarbon tax at what?
50%.
No.
I didn't get, please. Oh.
So I'm not clear.
At 30%. So what's 30%? Do you understand?
Sir, please, can you come again? This is not clear, sir.
I said.
Hello, sir.
Yes. Can you hear me? Hello. 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 Thank you, Jesus, baby.
I've done that, sir.
Yeah, thank you very much.
Jesus, babe, I already showed that she's Jesus, babe.
All right, so let's go ahead. Let me be changed.
Oluwaseun. You can go ahead, sir.
Okay, good. So that's hydrocarbon tax. I think that was where we stopped, Abby. Do you understand?
Yes, sir. Yes, sir. You can continue, sir.
Okay. So then let's move on to company income tax, right?
Sir, sorry, I have a question, though.
Yes, please go ahead.
All right, I want to get something right. You know, in determining our CPR ratio, the first one is gross revenue, then the part of the gross revenue. So I want to be sure, is it the total income, this gross revenue we are referring to here, is it the one before having the balancing charge or the income after adding the balancing charge? I want to be started. Which one are we? Because this question we saw like the same thing. So,
The gross income is
Hello,
after
sir.
you've added your balancing charge.
Okay.
Hello, sir.
Yes, please. Please go ahead.
So under hydrocarbon, the tax percentage is 30.
Yes.
Okay.
All right. Like I said, don't worry about the percentage. The examiner will do that for you. We'll always give you that in the exam. So any rate he gives you, trust him enough to use the rate. You understand?
Okay, sir.
When we have balancing allowance, how do we treat that here? Okay.
All right. So we have the B part of the question.
Hello, sir. Sorry, you talk about balancing charge. Can we have a situation whereby we have balancing allowance?
The balancing allowance should be added to the capital allowances.
Huh? What's that?
Do you understand?
Okay, so by the time we add it to the capital allowance, are we still going to use that? For instance, we are giving the balancing allowance to be 1,000. So in computing or in determining our cost profit ratio,
yes,
remember that you added the total capital allowance
to get your eligible cost.
Exactly.
Yes,
so
it
in
will
that
be
regard,
included.
are we still going to do that?
It will be included to determine the eligible cost.
And it should also be included when we are subtracting it from this capital allowance deduction from adjusted profit.
Exactly.
All right, noted. Thank you.
You're welcome, sir. So 122 year of assessment, Abi?
Hello, sir.
Yes, sir.
What of that additional information, number one, the first additional information, we will not even use it at all in the question, right?
It doesn't be useful.
Yes, the act says first two appraisal cost is allowable for tax purposes. So whether tangible or intangible. Yes, I understand. Whether tangible or intangible, it is allowable for tax purposes.
Okay. They also use that one to confuse us, right?
Maybe. I don't know the intention of the examiner. But you know, in ICANN, we are very trustworthy. We don't confuse people.
Okay, thank you, sir.
You're welcome. But honestly, ICANN is one of the best exams, right? So let's go ahead. What would be allowable for common income tax purposes? The first thing is for us to determine.
Yeah, it is. The syllabus is just too wide.
Yes. Yes, exactly. You get it. It's not a question, it's an observation, Abi. Kendi, Mr. Kendi. Okay, that's fine. So what's the gross income that we computed? The gross income computed are what?
594. 560.
Deduct allowable expenses, Abi. Are we on the same page?
Yes.
So admin expenses is allowable under common income tax, Abi.
Mm-hmm.
You remember?
Yes.
Figure me, please. 1980. But at the same time, you have to be careful of the additional information. No, you have to be careful of the additional information. Right? Are we on the same page? Then finance cost is also allowable provided it's at market value, right? Interest expenses are allowable provided it's at market value. And interest expenses how much? 25, Abi?
Yes.
Is that?
25.
Also, donations is allowable provided it's made to what? The approved bodies. Abi? How much is the donations?
132.
132? Is that what you said?
132. Yes, 132.
No, seen it too.
132. Donation to orphanages.
Additional information, sir.
Okay. 132. Right. So I shall trust you, don't worry. So all other ones are not allowable for common income tax purposes, right? For example, repairs of oil production utensils, repairs of plant for oil mining, concession rentals, production costs are not allowable for company income tax, right? So those are the three expenses under company income tax that are allowable for tax purposes. So we have made a mistake. We have this, right? Sorry, hold on. I think I've made a mistake. Okay, sorry. Royalty is allowable under Company Income Tax Act, right? Production cost is allowable, and you know the rule for allowable expenses is that, hello, are we together?
Yes,
The rules for
yes, we are, sir.
the rules for allowable
Yes.
expenses is that it must be only reasonably exclusive and necessary for the business, right? And donations made to a fund created by the government for the purpose of ecological crisis, war, and other natural disaster is allowable for tax purposes provided it's not more than 10% of the adjusted profit. Abi? Do you remember?
Yes.
So it means all of the expenses will be allowable under company income tax. So other allowable expenses. So that's the total operating cost. And the total operating cost is how much?
3.
Is 294,539. Right? So you then have adjusted, but in this case, adjusted slash accessible profit, Abi?
Yes.
And so you have 594,660 minus 2,137 minus 274. So you have 317,984, Abi? Are we on the
Yes.
same page?
Yes.
Then less capital
Yes, sir.
allowance. So how much is the capital allowance?
Allowance. 45.
45, right?
Yes, sir.
We are deducting capital allowance because we don't have loss relief, Abi. Remember, when we were doing loss relief, we said loss relief should be granted preferential treatment over capital allowance. Do you remember?
Allowance. Yes, sir. Very well.
So total profit. So total profit is 317,984 minus 4,500. So that gives you 313,484.
84.
Right? So
Hello,
company
sir.
income, yes, please.
Other allowable expenses. Can you please come again on it?
Hey. Sorry, hold on. Let me quickly finish this one. 3, I will come again, sorry. Times 313. So you have this, right? Then you have tertiary education tax. And you know, beginning from 2023 year of 2024 year of
2.5.
assessment, it is now 3%, Abi?
Yes.
Sorry, sir. You said tertiary education is 3%, but to use 2.5, sir.
I didn't say it's 3% like that. I gave a caveat. I said beginning from 2024 year of assessment. Yes, you will consider it if you are doing less, add back the salariable expenses. But the route you followed was net revenue route. We didn't do net profit route. So that's why we didn't consider depreciation. You know, you have two routes to determine your adjusted profit. You can use the net profits, add the salariable expenses, or your revenue less salariable expenses. So it is revenue less salariable expenses we follow. That's why we didn't consider depreciation. Yeah. Somebody wanted to say I should come back where?
Other allowable expenses.
Yes, other allowable expenses.
Yes, so I was saying that all the expenses that were allowable under, for Petroleum Industry Act, we had production cost, royalty, concession, repairs, first exploration well. They are all allowable under company income tax because they were only reasonably exclusive and necessary for the running of the organization. So that's why we added them to the allowable expenses. All right.
How will you merge this recording together?
What do you say?
Okay.
Sir, how will you be able to merge this recording together now? Or are you going to post it separately after the class?
I didn't get
there
you.
Was a bridge. The recording, there was a bridge.
No, there's no bridge. Don't worry. I will take care of that.
Okay.
I'll concise them to one.
Okay, thank you.
You're welcome. Any question?
So I have a question here. In terms of CIT and PIA, is there a difference between accessible and adjusted profit?
I didn't get you.
Okay. In CIT and PIA, like on that side, is there a difference in CIT? It's all the difference between accessible and adjusted profit. And also in PIA, what is the difference between accessible and adjusted profit?
There's no difference in income tax. There's no difference between adjusted profit and accessible profit. We have some school of thought who said that the difference between adjusted profit and accessible profit is loss relief. But based on the provisions of the tax laws, there's no difference between adjusted profit and accessible profit.
I don't know.
Do you understand?
All right, sir. Thank you.
You're welcome.
Okay, that means both in CIT and PIA.
Yes. Any other question?
Sir, please, sir, when computing TET, sir, don't we compute TET for this PIA now, sir?
Hydrocarbon tax? No.
Yes, sir. All right, sir.
Is only for company income tax you do your TET.
So I have a question.
Yes, please.
We've computed tax liability for hydrocarbon and also for CIA. So which will be remitted to the tax authority?
Both of them.
Both of them.
Okay.
The idea, before they remit 80%, 85%. That's the tax for this thing, petroleum profit tax. But now that is not permissible again. So they remit hydrocarbon tax and company income tax.
Okay. Thank you.
You're welcome. Any other question?
So, sir, sorry, sir.
Okay.
Sorry, sir. Does that apply to PP tax, petroleum profit tax too?
I didn't get you again, no.
Can you hear me?
Yes, I can hear you, but I'm not getting you.
Okay, I said, I mean the tax rate. Does it apply to petroleum profit tax too?
Which tax rate is that? Petroleum profit tax
Yeah,
was 85%.
yes.
So
Okay.
now that 85% is no longer necessary again. So what they do is they remit hydrocarbon tax and at the same time remit common income tax.
Okay. Thank you. Do you mean for mining lease and
Prospecting
prospecting?
license.
What about the other one? There's another one, petroleum license or something like that.
Oil
Is it the
field.
same? Sorry?
Yes, all of them will still be paying hydrocarbon tax and common income tax.
Okay. My second question is, this particular question they give us from revenue base, whereby we now deduct all our allowable expenses. Can we have a situation whereby they can give us net profit base? And if that is the case, are we going to follow the same? I know that we are going to add back the allowable expenses. Do you get? But
Yes.
after adding back the allowable expenses, are we still going to follow the same process of computing cost profit ratio?
Yes, you
The
still
restricted.
yes, you have to follow the process to compute your cost profit ratio. Do you understand? You still have to follow the same process to compute your cost profit ratio. So if you are having a full-fledged question, I will always advise you to always go through the income route.
Okay. And please don't forget, you said you will put us through how to get posted price should in case we are not given directly.
Okay. Yeah. Okay, you know what? Can we meet tomorrow? I don't want to lose today's video. Can we meet for 7 p.m. tomorrow? Is that a deal?
100%.
It is okay by me.
Yes, it's okay. It's okay.
All right.
Eh?
All right, sir.
Yeah, it's fine. It's
All
fine.
right.
We are the ones seeking for knowledge.
My
No choice.
system is low, and if the system should trip off now, I will lose the video.
Don't lose it, sir.
All right. Thank you very much. I appreciate your patience and I appreciate your coming. God bless you.
Thank you so
Good
much,
night,
sir.
sir. Thank you for your time, sir. God bless you.